Good morning, everyone. How are you guys this fine Wednesday morning? Hold on here just one second. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. For those of you new to our trading room this morning, welcome. I'm going to give you a really quick overview of what you're looking at here. This is the sorry, I'm getting confused already. This is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. The Raptor is the latest addition to the DTS family, and it's essentially a blend of the other three tools. Now, each of these tools have been specifically programmed to find their peculiar market environment. And the charts we're looking at here are the NASDAQ. I'm also following soybeans and crude oil this morning, but I would be happy to take a look at any market which is of interest to you. So the NASDAQ just opened up. We'll take a look here at the overnight. And it looks like it was a fairly active overnight and Asian session. So let's see, we finished off the day right about here. Some couple of swings through there. Then we had the bands change over here at the Asian Open, and we got a nice buy signal off the band. And that just kept going higher and higher right through the European Open, where it settled for a little bit before repeating the whole thing and going higher. So here we are with the North American Open, and it's going to look like a great big opening gap here below the market. So we'll see whether or not they try to get into that this morning. I should mention today is the last day for the dynamic equivolume bars. You're going to notice that some of the bars here are different widths. Equivolume charting was developed by Richard Arms, and essentially it's a very easy way to incorporate volume into your trading. What the equivolume bars do is they will paint wider or narrower depending on how much volume is present at that particular bar. And let me get you the discount code for that. Like I say, it's good for today only until 11:45 p.m. Eastern. And I will get you the link for that also so that you can learn a little bit more about them. Just bear with me 1 second. We're just waiting for the market to settle a little bit, some of that early morning craziness that goes on just after the open. Wow, the advanced decline very lopsided here. Jim's shooting me some numbers. Almost 2,300 buyers and just barely 300 sellers. All right, so here's the link to the dynamic equivolume bars as well as a lot of the other tools and things that you're going to see me use this morning. So if you have any questions, you can ask me or you can follow that link that I just sent you. And that should give you a pretty good idea Okay, so a little bit of a rally here out of the gate. You're going to notice that all the signals develop the same way regardless of the tool that we're using. So for instance, here on the Hawk Scalper, we get a warning dot as well as an audio alert to let us know that the signal is, some of the signal parameters are being met. And then when all the signal parameters are met, we're going to get a triangle and a hash mark, and that gives us our buy or sell signal. This signal right here was the first micro-macro cross that came just out of the open. This tends to be a very high probability signal, and you can see why it took, I bet you we found our profit target off of that first leg. Let me just frame that up a little bit. Yeah, we did hit our profit target. Then we came back with a macro pullback signal, which is this guy right here. And this is the one that seems to be going a long ways. So the NQ with a decidedly bullish flavor today. Oh, we had a late filter entry signal right here in the Falcon also. I'm not worried. We're going to get another chance here. But the first micro-macro cross, the macro pullback on the Hawk, and the late filter entry signal here on the Falcon, all high probability signals. The late filter entry signal, remember, the trend line does not change color. The filter goes out of sync and comes back into sync. That's very important with that late filter entry signal. We have to see that filter come back into sync, the signal print, and there you go. This is such a high probability signal. We rarely see that one fail. All right, we just encountered the secondary resistance line here on our support and resistance suite. This is one of these add-ons that I mentioned to you. This will work on any chart style, not just DTS. It's an assortment of 21 support and resistance zones. No, they are not pivot points, and no, they are not Fibonacci levels. If they happen to coincide, it's more by coincidence. You can see where we're bouncing nicely off of the primary resistance, came up here to the secondary resistance zone, and now we're getting a little bit of traction on the part of the sellers. You see how they're starting to dig in there. So not saying we're going to get a full-blown reversal here, but we're looking at a little bit of a hesitation to be sure. Might have to wait for a little bit of structure here. Let's take a look here at the Eagle Trend Trader. And here, right out of the open also, we got a red bar buy signal. Again, one of these high probability signals that we look for. And now the Eagle is one of the few tools that I will take right out of the open because of the reliability of the signal, because of the way the signals build. And you can see that one also had some pretty good follow through to it. I'm hoping that's not going to be the move of the day. It does seem to have been the method of the NASDAQ of late to make a big move early and then kind of peter out for the rest of the session. So like I say, if you have any questions or anything, feel free to ask while we just wait for a signal to print here. Just doing a little housekeeping. All right, we're getting some scalp warnings, and we are getting a series of macro pullback signals here. Very often that is a sign of weakness, so we'll see how that plays out. We might get an opportunity here to short. Okay, so they're rolling over a little bit. And now we're getting our first micro-macro cross to the downside, which was just spoiled by yellow bars. The yellow bars here on the hawk are very neutral, and we tend to avoid them. The yellow bars will very often indicate a market that's turning choppy. We did get a trend change signal here on the Falcon, if I can get back there. There we go. Oh, don't run away on me now. So the trend change happens when the trend line changes color, and we get this typical down, up, down pattern. Well, maybe I can still take this one on a second push. Try to cover it up there. I really dislike getting into the market late, but we might not have a choice this time if we want to try to participate. Ah, thanks, Jim. Jim's watching the cloud on the mini Dow, and I'll show you what he's looking at here on the Raptor. This is the NASDAQ, of course. So Jim's been watching the width here of the double cloud, and he's noticed that when it hits about 50 ticks, 45, 50 ticks, it's prone to a reversal. And now that we're into the hard edge, notice we're generating a a first micro macro cross here. These bars got some width to them though, so that definitely shows us there's a struggle here between the buyers and sellers. Oh, took a little slip on that entry. Okay, we're just about to our break-even trigger, and you're going to see the trade manager grab my stop, roll it to break-even, and we hit our profit objective. I didn't even need to engage my trade manager stops on that one. Let's take a look here what's going on with the Falcon. And with the Falcon, we're just hovering above the break-even trigger. Had we gotten the entry we wanted, well, we'd already be at our profit objective, but such is trading. I'm going to, I don't need to enable my stops here either. Okay, so the market fell off nicely both times. I didn't even get a chance to show you how the trade manager trails the stops for you. That's what these little blue dots are. We've got 16 different stop strategies to choose from here. And each one is customizable. And once you're in a trade, you can use this. You can allow the trade manager to manage your open position for you. So that actually enables you to look for other trading opportunities. Good call on that band, Jim. Look at that. This is what happened yesterday with the band too. I think this is definitely one that we're going to enter into the books. We had enormous follow through yesterday on those when the band got overextended like that. Now we're getting the clouds crossing over and we're producing a possible sell signal here. When the clouds cross over on your Raptor, remember, let's get way back here. They do tend to lend some support to the initial signal, so that's what I'm looking for now. You might have noticed this tool up here in the corner. This is another one of these add-on tools. This is called the Geiger counter. And the Geiger counter is essentially a tape reader. It gives you a visual of the time in sales. And you can see that right now we're fairly bullish. There's a lot of short-term buying going on, but notice this little spike that we have here in the tape. Very often that's a sign that there's some stop running going on. Although it does look as though the sellers absorbed most of it. Oh, here they come again. Look at all that buying pressure. And our Geiger counter needle full on green. Colin is asking, what's the setting on the double cloud? We're running two Raptor clouds. One is at 10, one's at 8 ticks, the other's at 10. Yes, this double cloud is, thanks to our Raptor forum, it's one of those insights that fellow Raptor owners have discovered, that it seems to work pretty well, maybe a little better than the single cloud. So we've kind of adopted that. Now we're getting a whole lot of choppiness going on. And I guess no real surprise after this morning's gap. Another, sorry, I'm going to be late on this one. Another red bar buy signal here on the Eagle. And let me see if I can make this a little bigger. There we go. Our ATR just flipped over. So this bar here is our signal bar. And I would have liked to have set it up like this. But we'll see if we get another chance at that one. Ooh, and a very tempting first micro-macro cross signal here in the NQ. Okay, well, like I say, we know this tends to be a high probability signal. The first micro-macro cross is the first signal that develops after the microline and macroline cross over. Everything else comes into sync. It's since pulled into a macro pullback signal, which is also a high probability signal. Get up there. Wow, did you see that? We actually got a little positive slippage on that one. The NQ just wild this morning, but we got some pretty solid signals there. That first micro macro cross, definitely one of my favorites. All right, so the first flying a little bit. We'll give them a moment here to settle in again. Soybeans plodding along nicely. Here's soybeans on the Eagle. And you can see they've been kind of quiet the last few days. These vertical lines are our daybreak lines. Now I do have the soybean market on our secondary settings, which would mean 4-tick Hawk, 4-tick Falcon, 6-tick Eagle. And that's because this is one of those instruments that trades at $12 a tick or $12.50 a tick. But you're going to notice here, this actually came in the overnight, I think. Yes, it did. We generated a hard edge bounce. I wouldn't have got it because I was sleeping at that time. Oops, and that's a little bit out of range. Notice how the trade manager protects me, keeps me from taking a trade that I can't afford. But the nice thing about soybeans is that once they settle on a direction, they pretty much just go. You know, a very good trending market. If you're looking for a market to round out your assortment, soybeans is a pretty good one. You could do a whole lot worse than soybeans. Don't usually see too many crazy moves, although I will warn you, it is a market that is susceptible to limit moves. You could find yourself in a lock limit day. Now that's not to scare you, it's just to warn you. I've never been locked in a soybean move. I've only been in a couple of locked trades, and fortunately they were all in my favor. Today, crude inventory in about another half an hour, and crude, here's crude on the Falcon. We just generated a trend change signal right here. Trend line went from red to green. Here's our up. That's the portion that changed the trend line. Here's the down. Here's the up. Here's the signal. And the market continued a little bit higher from there. So nice little bounce also off of the primary resistance line. That's this blue line. So the orange line is the median line, then we've got the primary resistance and primary support. These three lines right here tend to be the most influential. Now that we're above here, things could be a little bit bullish, but hey, it's crude inventory. Your guess is as good as mine. We'll see what comes of that. Come here, you chart. All right, we're folding over here a little bit again. All right, you can see a little first micro macro cross signal right here that had decent follow through to it, at least enough to find our profit objective. Notice how we are getting some width on these bars now. That's a little bit of buying pressure coming into the market. So here was our first micro macro cross. Again, pretty easy to identify. There wasn't a lot of structure here. I'd like to tell you in hindsight that I would have put the stop right there, but I probably would have put it up here. Even so, a quick little scalp. Now it looks like the buyers are stepping in. We're starting to get some yellow bars drifting in here, and our filter is starting to break up. That's an early warning that the market might be getting a little bit choppy. That might build into a 4-arrow consolidation, or maybe even a macro pullback, which would be a desirable trade to take. If they do start to rally here, though, they do have some room. Oh wow! Jim says the advanced decline still skewed to the buy side. 2,300 buyers and about 500 on the sell. Okay, we're into a macro pullback signal here. We've also encountered the hard edge on the Raptor and the hard edge on the Eagle. Oh, if this gets much higher, we're going to get into yellow bars and look at a possible trend change. Yeah, so those yellow bars just nix that macro pullback signal, but that's all right. Falcon working on a possible trend change signal here. Jim's following the DAX. He says the DAX is sitting on trend line support, so we might see the market bounce after all. We do have a macro pullback signal still here with the hawk. I probably would make it enter below here. Oh, now we're into yellow bars again, so that kind of nixes that. Remember, your triangle and your hash mark is really just a suggested entry. You don't have to enter right on the hash mark if you don't want. Yeah, too bad that yellow bar got in there. It looks like it did have enough follow through at least to get to our first profit target. Yeah, more yellow bars. See here, all these yellow bars that are cropping up in the hawk. That's telling me that there's a lot more buying pressure coming into the market. It's affecting what the sellers are able to do. You would expect that if the sellers had control of the market, there would be a lot more follow through here, but at the moment, oh, and now the Raptor's got to give me a double pullback signal. See, we got two pullbacks into the hard edge, and now we come out with a sell signal. This tends to be a pretty strong signal for the Raptor. I might take it below the lows. Rather than right on the hash mark. And I'll enable my stop strategy, give myself a little bit more room. Now, if this signal fails, we will have had our test of the extreme. We can come back here with a buy signal. We can actually take a look at buying the next signal to the upside. Let's see if we get a buy signal here, and I'll punch in with a trade. The tool that you're seeing me use here on the right-hand side, this is the Trailblazer. This is essentially a one-click entry system. It's going to give me my order fill. It's going to give me my profit targets as per my setups up here. And it's going to manage my trade according to my selected stop strategy. The sellers are not giving it up. All right, here they go. Here's that double pullback signal. They're going to try to tap me on the downside. Honestly, I'm a little bit more comfortable buying with all this hesitation going sideways, but the tool is telling me it is setting up to go short. We're getting a first micro macro cross and a hard edge bounce here in the eagle. So a lot of confluence across the tools. So here we're getting our hard edge bounce on the eagle. So the hard edge there, the band has turned over. We've had our test of the extreme. Let's get back here to the Raptor trade. Give me a chance to manage this a little bit. Okay, so what I want is I actually want to hold my stop above this initial high. So I'm going to disable my stop strategy just for the moment. And I'm going to go get ready with my bar high low. So when the sellers do show up, I'm going to get the stops in a little bit more aggressively. Yeah, that's exactly what I was afraid of. Oh, that was unfortunate. But it was a solid signal. The nice thing with these tools, though, the Trailblazer, you have to more or less estimate your position size. What would the normal position size for you would look like? But with the Trade Manager, you can never, here, let's do this on the Raptor or on the Hawk. With the Trade Manager, you can never risk more than you can afford. You see, you're containing your risk to only, well, in this case, 2% of my trading capital. So even had I taken this trade down here and say covered it up here, yeah, it's a $300 loss on 2 contracts, but this is an amount that's only 2% of my trading capital. That is an amount I can afford. That's the very important thing to remember. And like I always like to say in the trading room, you get to see something you'll never ever see in another trading room, a trading moderator actually admitting to taking a losing trade. I'm sure you've been in those rooms where the moderator starts making all kinds of excuses. As good as the tools are, they are not 100%. You see, we had, what was it, 3 or 4 good signals this morning. That one was a little bit of a sucker move. We kind of saw it coming with all the yellow bars through here on the Hawk. But, hey, that's the point of a demo room, right? Show you how these things work. And for those of you who have just arrived, just a reminder that today is the last day to get 10% off the Equivolume bars. That's the bar style that you see here. These will work on any chart style. I'm using them here on the Indicator Warehouse mean Renko bars, but you can use them on tick charts, you can use them on time charts, pretty much anything. And for today is the last day of the sale, you can get 10% off, and I'll get you that link again where you can get that information. Okay, so the first micro macro cross to the upside, big follow through so far. And the buyers just lighting it up. Let's go buyers. A little bit of a selling effort. we could be in for a longer move here to the upside. We'll see if this progresses into a macro pullback. We're getting a trend line touch signal here. And we'll see whether or not the eagle doesn't come back with another opportunity here also. Perhaps a soft edge bounce. So these first micro-macro cross signals, you can see why they're my favorites. You can pretty much make a living trading first micro-macro crosses. There's one right there. This is the one that failed. Now let me see, did we get to our break-even trigger on that one? Did that get low enough to actually keep us out of trouble? Oh, it did too. So we would have hit our break-even trigger. Look at that. Kissed our high probability profit target and then reversed. You'll see this so often where not that it kisses the high probability target and reverses, but how effective the high probability targets are. Okay, so there's a couple first micro macro crosses. Here's another first micro macro cross. That one had some nice follow through to it. Here's the first micro macro cross. I believe we took both of those right there. Here's another first micro macro cross. This is a macro pullback, first micro macro cross right here, just out of the open. So we had 1, 2, 3, 4. This one was break even, 5 and 6 signals this morning already, all first micro macro cross signals. And if you were running, say, 2 contracts on each, depending of course on your account size, if you were running between 2 or 3 contracts, you'd be up anywhere from $500 to $750 already. That's not bad for almost an hour's work. And like I say, very, very high probability signal. Here's a late filter entry signal on the Falcon. Again, the trend line does not go out of sync. The filter goes out of sync, comes back into sync. This one hasn't tripped yet. The problem with this particular trade is we have very little structure down here. So where do we go to cover the trade? Well, we could use the resistance line from the support and resistance suite. This high right here is the big one though. That's the one that we need to get over. Chances are pretty good though, if I get filled at 41.54, I'll get filled at 41.54 and a quarter. I took a little bit of a hop there. You see they even slipped me a tick. Oh, I got filled 41.54 and half. So I got slipped 2 ticks. Should have taken it on the trend line, or the trend line, the hash mark. A little bit more buying pressure or selling pressure coming in here now. You can tell from the width of that particular bar. Okay, come on, buyers, where'd you go? So once I see where the buyers are, I will adjust my stop strategy, perhaps going with something like the bar high low or the parabolic, something that's a little bit more aggressive. So fully expect the buyers to dig in soon because of this support level that we have here. Okay, here's a little bit of buyers trying to rally the market now, and that's off this obvious support. Going to take a look at crude oil here in a moment as we get closer to crude inventory. Oh, come on. You got to give me a little bit more than that. All right, well, we'll just let this one simmer for a moment as they get their act together. Let's bring the Falcon for crude oil over here. Now, we can use any of the tools for this. I tend to gravitate toward the Falcon for the inventory report. Only because the Falcon will very often give us ranges that we can use. It'll show us consolidations. Not so much today. They're really honoring our support and resistance lines. Look at this, got up here to the secondary resistance. Sure, it's a tick or two short, but hey, don't forget, we're forecasting where these lines are going to occur in the future. So if it fudges it by a tick or two or comes up a tick or two short, you got to give the tool a little bit of leeway. Normally, what I'm looking for is a range like this, where we have well-defined support and resistance areas, and I can use our OCO function and just bracket the range going higher or lower. But it doesn't look like we're going to have that luxury this morning. We may have to go with our alternate strategy, and that's to let the inventory report hit the floor, watch the initial reaction, and then bracket the range. That's the other way that we'll do it. Of course, you can just go with the Falcon signal. I'm surprised at how often the tools will actually generate the correct signal before the inventory report comes out. So you actually get a chance to get on the right side of the market before the report is even released. All right, I just heard an order fill, so it looks like, hooray, our Falcon trade found its profit objective after giving us a little bit of heat, nothing too serious. The buyers dug in, rallied the market, and we hit our profit target. Hooray for us. Okay, we've got about another 7 or 8 minutes before the inventory report is released, so I'll just put that back on the shelf for the moment. The advanced decline numbers still seem to be skewed heavily in favor of the buyers. Jim's shooting me some numbers here. 2440 on the buy side and 440 sellers. So the advanced decline creeping a little bit higher. I think it was about 1800 before, and now it's a positive 2000. For those of you who are watching advanced decline numbers, that's definitely bullish. Oh, there we go. Another first micro macro cross signal. I was taking a look here at crude and soybeans. Wow, the NQ doing fantastic this morning. The Eagle didn't really give us a signal here, which is a little bit of a surprise given that we're in trend mode. This tool here is the trade forecaster, and it tends to tell you what the current market environment is and what the next one is likely to be. So you can see we're going to be in trend mode for about another 3/4 of an hour, after which it says we're going to move into swing mode, and definitely we are in trend mode today. The band spoiled this red bar buy signal, which is a pretty strong buy signal on the Eagle. We did come back with a trend change signal, but not until right here. So we'd currently be working that trend change signal. Let's see if we got a nice signal here on the Raptor. Yeah, we got the cloud crossover right here. Note again how the cloud is supporting the signal. So there's a signal you could have taken with a fair amount of confidence. Into the hard edge bounce, comes out. This one would have been a little bit trickier. Honestly, when that was developing, I might have been looking for another pullback into the hard edge. So had I set up to take this one, I probably would have covered the trade below the hard edge here in anticipation that perhaps we were going to get a double pullback signal. See, this is a double pullback signal here. The market comes out, generates a signal. Normally it has better follow through. So here's pullback 1. I might be anticipating pullback number 2, and then the signal coming out of the hard edge. But this one just gave us the single bounce. Not bad though. We're definitely holding our own. All right, only about 3 minutes to crude inventory report. Let's get that chart over here. So you can see we've established the high up here, the low down here. We could just bracket that range entirely. Well, here, I'll do it so I can demonstrate the OCO function. So when you use the OCO, you need to remember that these are going to be live the moment you put them on your chart. And you know what? This is crude. I'll take it right below the median line. I know it's kind of cozy here to the upside, and it's not at all unlike crude to fill me on the wrong side of the trade. I'm going to get a very generous stop going here. See, we're working actually on a trend change signal. If I got the trend change signal, I would even bring that in a little bit tighter. I'm debating using the secondary resistance line right here, because we're kind of, the market's held by the resistance at the top. We're skewered by this resistance line right here. I'll use that resistance line there to enter to the short side. And in fact, what I'll do is I'll disable my stops just for the moment. All right, crude inventory should be released any moment now. And if the market just gets too crazy, I'll just force a close. All right, it's the bottom of the hour. We should see them light it up here in a moment. See how bad they slip my entry. Oh, you can use limit orders too, or stop limits. We have all kinds of different market orders to use here. All right, so they've filled us to the short side. I'm going to disable the break even. It looks like they didn't slip us too bad, all things considered. Our OCO, our buy order canceled, so we're currently just short. I've got the preview going here for the stop strategy. Let's see for the swing high-low. There we go. Take it above there. I'll enable a stop now. And this is just my safety net, that stop up there. I fully intend to adjust the stop more once the trade starts to progress a little bit. So near this primary resistance again, tending to hold the market back a little bit. See, we did get the trend change signal right here, but it all developed too quickly to actually take advantage of it. Very often this trend change signal will develop just before, like about a minute or two before the inventory is released. All right, come on, crude. There you go. Get down. All right, so the next target is going to be the median line. That's that orange line. And you can see how Trade Manager rolled my stops automatically for me. Now I'm going to go with the ATR strategy, and you see how it's going to roll it according to the stop strategy. So we just hit the median line. I could have used that as a profit target. I'm just trying to demonstrate how these tools work for you here. The other thing you could do, see if you wanted to go with the more liberal swing strategy, you could leave your stop back here and you could force the trade to break even. So that kind of gives you the best of both worlds. Let's see if we can't get the market to fade here to the primary support. What do we got? We got about 300 in open profit so far. So if you wanted, you could throw in a buy order just above the primary support, see if the market will drift that low. That can be your profit target. And now we're coming with a trendline touch signal also. That's when the falcon retreats to the trend line, touches it, produces in this case, a sell signal. And of course, nothing's keeping me from being more aggressive with my stop. If I wanted, I could go with something, say, like a parabolic, or the bar high low, which would make my stops much more aggressive. Capture some of that open profit. The bar high low would bring it in just above the highs right there. We'll go back to our break even. It's one of the luxuries of being a room moderator. I can show you these types of things. But if I had down here where we hit the median line, we probably had about $400 in open profit. That's starting to get pretty close to my pain threshold. So I probably would have just pocketed the money. But let's see if we can't ride this little swing out. Filter is out of sync. Trend line is not. Let's see if they come back with a late filter entry signal here. That could be interesting. Come on down, crude. Come on. Nope. Too much buying pressure. So the buyers dug in here on this median line. Sellers are fighting it back. Don't know if we're going to be able to ride out this swing, though. Nope, doesn't look like it. And if we do, that will go in the books as one of my luckiest trades ever. No. Well, it was worth a try. At least I got to show you how the OCO order worked. Okay, we'll put crude oil away for now. As they sort themselves out. And, there's another first micro-macro cross. Just a ton of opportunities in the Hawk today. Another hard edge bounce here in the Raptor. We're getting some very good follow through. You know, we could see the NQ rally all the way to 4,200 the way it's going. You heard it here first. In fact, I'll even go out on a limb and say 4,220. That's a long ways away still. I look like a rock star if it hit 4,220 today. Nobody will see that one coming. It's like a trading friend of mine always used to say, the big money is on the surprise side. Okay, well, let's see here. Nothing going on in soybeans right now. I'll flip over to the E-mini. Surely there must be an E-mini trader in the room today. Just give those charts a moment to load. The E-mini always a little bit more subdued, I think, than the NASDAQ and the mini Dow. All right, so here's the E-mini on the Hawk micro scalper. And yeah, this morning's session, a lot choppier looking. There's a first micro macro cross that we had out of the open. Macro pullback that didn't trigger. A red bar buy. Now this is a signal we haven't seen on the NASDAQ this morning. This is actually a weaker signal as far as the Hawk signals go. It tends to develop near the end of a trend. But in this case, it would have been a feasible trade to take because we haven't seen a test of the extreme yet. We haven't seen the market retest the highs and fail. which is what the market will do before it reverses. So you can see we had a nice opportunity there on that red bar buy, but there's a first micro macro cross that didn't trigger, a lot of yellow bars. Here's a first micro macro cross to the downside. Ooh, that one, let's see if it hit our high probability profit target. Now with the E-mini, a lot of times I'll stretch the profit objectives, but the high probability target is $50 per contract. Oh, and there too, that's that same signal that we saw in the NQ where it just hits our high probability target and reverses. Good news is we would have got out at break even, running our break even trigger. Another first micro macro cross, looks like that one hit the profit target. And now we're working on yet another first micro macro cross in the E-mini. These wicks here on these bars are starting to look a little bit more bearish, however. So there's the hawk. Let's take a look now at the falcon on the ES. And again, a little bit more subdued. Let's see, where did we open? We opened right here. Nice bounce off of the primary resistance. Came out with a quick trend change signal, an early trend change signal. This would have been a little bit difficult to get, but you did get the proper trend change signal a few minutes later, right here. Nice little move up, trend change signal to the downside. So two back-to-back signals here on the Falcon. Looks like those both reached their high probability targets. Here's another trend change signal to the downside. Looks like it drifted low enough to find its profit objective. And now we're working on a late filter entry to the upside, taking a little bit of heat on that one. And I think that may have just hit the high probability target also. So the E-mini respecting our support and resistance lines pretty closely today. And we might as well take a look at the eagle while we've got it all going. All right, so here's the open. We had, well, actually we did generate a signal off of the open. This is technically a hard edge bounce. I would have been more interested in this one here though, the red bar buy. That's a higher probability signal. Took a little heat on it, but we came back with yet another red bar buy. That one had some follow through with it, and here we sit, just kind of waiting right now for another signal. So it looks like we had signals across the board with our tools today. It's very nice. Dan is asking, what do you mean by high probability profit targets? Each of our tools have got high probability profit targets. Those are our default profit targets. Of course, you can go for more or less. Some tools or some instruments like crude oil, because it's normally so active, not as crude has been of late, but how crude usually is. I will double the profit objective. Same thing for gold, the Russell, any instrument like that that tends to make a little bit of a larger range. The mid cap. Oh yes, I forgot the E-mini on the Raptor. Just 1 second here. I will load up the E-mini on the Raptor and I'll bring that over for you. So when I just load a fresh chart, you can see the Geiger counter restarts its count. The E-mini, very smooth progression on the Raptor this morning. So where did we open? We opened right about here. Actually, what I need to do, let me adjust the Raptor bar. Because The default settings work for 99% of the markets that you're trading. Unfortunately, the E-mini is the most popular market that falls outside the parameters of the default settings. With the E-mini, we go with alternate settings. Most instruments that trade at $10 a tick or less will work perfectly well on the default settings. The E-mini or other instruments that trade at $12.50 a tick or more, we have a set of alternate settings. So it looks like, actually I might have to change these as well. These are printing a little bit too fast. Yeah, hold on one second. Let me split the difference. As you can tell, I don't trade the E-mini that often. I feel that I get more bang for my buck with an instrument like the NASDAQ or the mini Dow even. The lower tick value allows me to take more contracts, which makes managing the trade, normally makes managing the trade that much easier. Okay, here on the Raptor. So here we had the open. I'm surprised we only had the one bounce. I thought for sure we would have a double pullback in here somewhere. See what the E-mini did yesterday. Yeah, yesterday was a little bit more active here with the E-mini. Today it's just been a smooth trend. Unfortunately, the best signal probably came here in the Asian session as the clouds crossed over, or the end of yesterday's session. We got the cloud crossover, we got the buy signal, the hard edge bounce. The market just continued higher. It's been nothing but soft edge bounces all the way, which is actually very bullish, by the way. If the market is not even getting to the hard edge, that's a very bullish sign. So there's your E-mini on the Raptor. Not as much to look at as I thought there would be. Now you can see we're producing a lot of yellow bars again. That's going to slow things down somewhat. Might not get 42.20 after all today. Might have to scale that back a little bit. See, here's the Raptor on the YM. This is the mini Dow. And you can see we produced a few more signals. Not quite as smooth looking actually as what we saw on the E-mini. But the hard edge bounces are a little bit easier to buy into because we always expect a reaction off of the hard edge. So here was a hard edge bounce. The market comes out. Here was well, it encountered the hard edge, actually broke it, flipped the band over just temporarily. I might have considered actually getting ready to short here because when this was printing, it looks as though we would have had our test of the extreme, actually several, right? Each of these being a test of this level here. And then the market starting to unwind, possibly head lower. This was a very bearish looking signal right here. I think this was the same one that fooled me on the NQ. That should have had a little bit more follow through. But we did kind of get a clue from the hawk as well that with all the yellow bars that we're printing, it was a little bit of a sucker play. I fell for it. But like I say, the nice thing about the mini Dow or the NASDAQ versus the E-mini is at $5 a tick, it's so much easier to take a couple of contracts, and I find it so much easier to manage 2 or 3 contracts versus a single. Because of course you're in a trade, you have open profit. If you have a single contract, it's always the do I take profit now or do I try to let it run scenario. Whereas if you have multiple contracts, well, you just unwind one of them, right? It's pretty simple. All right, all these yellow bars here in the hawk, our filter starting to break up. This is starting to look a lot choppier. That may have been the move of the day there, folks. We might see the NQ kind of move sideways for the rest of the session. The other thing that a lot of people don't notice is that they think trading the E-mini at $12.50 a tick, they're going to make more money, right? Intuitively, you think, oh, well, it makes more money per tick. But very often, the NASDAQ and the mini Dow will move the equivalent dollar amount that the E-mini will move. Not always, but very often. So in other words, if the E-mini makes a $200 move, the NASDAQ and mini Dow will also make a $200 move. So that's why you see me watching the NQ. Plus, there's a lot of volatility in here. There's not too many days that go by that we don't get some excellent trading opportunities. Okay, you guys, we're nearing the top of the hour. Does anybody have any questions? We might be closing up the room here in a little bit. Once again, I'll give you the details for the equivolume bars, which are, here's the discount code to save 10% on the equivolume bars, and that deal ends tonight. Also, if you're interested, I'm going to go out on a limb here, but a lot of times, if you're interested in another tool, Adam will extend the discount to the other tool as well. So you'll have to email him on that though, because the discount code will only work for the equivolume bars, but you can email Adam. Here's Adam's email address. I put that in the chat window. And I'm sure he will work that deal for you. You can tell him Eric said so. That'll always get me in the good books with him. All right, you guys, if there's no more questions, I think we're going to close up the room this morning. Thank you very much for your attendance. I hope that you were able to perhaps participate in a couple of those trades. Maybe learned a little bit, something that you didn't know before. At any rate, thank you for your time. Craig, yes, quick question here from Craig. Craig's asking about the Trailblazer. Now, the Trailblazer, I only have it here on the Raptor. You can actually use this on any tool. So you can use it on the Hawk or the Falcon or the Eagle. This is just the way I have them arranged. Craig's asking, so the Trailblazer is a one-click entry system. Yes, it is. let me show you here. So I've got my stops up here. I'm going to sell in accordance with my stops. Watch this. I'm going to hit sell. I have my short order. I have my break-even trigger. You can turn the break-even trigger off, by the way, if you don't want to use it. I have my profit target, and I have my stop automatically engaged. This came about in response to requests from owners. You'll notice with the trade manager, what I had to do is if we generated a signal, like we do right here, I would have to, set my entry, set my stop loss. I can automate my profit target, and then I click submit. Well, what a couple owners said is, can you make that so it's just a one-click system? And we said, sure. The difference, though, with the one-click system, you don't have this risk component built in. So you need to know approximately what your average position size would be. So here with the Raptor right now, you can see we've hit our profit objective, hit our break-even trigger. So we took profit on one. I have one open contract remaining. I'm going to go with something more aggressive like the parabolics now. And you're going to see the parabolics manage the rest of my trade, essentially freeing me up to take a look at other opportunities. So it's a pretty good system, especially if you're looking at scalping, putting on, if you buy and sell market orders instead of using a stop order. It's very helpful that way also. Here, maybe I'll go with the ultra aggressive bar high low. This particular strategy will take me out on the first sign of weakness. All right, well, we'll just let that trade simmer. DTS owners, I will see you in the trading room again tomorrow morning, bright and early. Everyone else, remember next week we do have another open house, and the 10% discount on the Equivolume bars expires tonight. Have yourselves a wonderful day. I'll talk to you guys later. Bye for now.